Welcome to insightfulvalue.com. Postal Savings Bank of China, established formally in March 2007 on the foundation of a century-old postal savings system dating back to 1919, is one of China's major state-owned commercial banks with extensive reach and a mission focused on inclusive finance. It serves rural and underserved areas through the largest banking network in the country, over 40,000 outlets, with around 80% operated by postal agents and the rest self-run branches, covering 98% of China's counties and serving more than 600 million individual customers and hundreds of thousands of small and medium-sized enterprises. The bank's operating model, combining self-operated plus agent branches, enables deep rural penetration and low-cost deposit accumulation while fulfilling its policy mandate around agriculture, rural development, and financial inclusion. Sanong. Its offerings include personal deposit accounts, SME loans, microcredit for rural customers, wealth management products, insurance, foreign exchange, trade finance, custody, and digital banking services. The bank's revenue mixes interest income from a vast loan portfolio, especially personal loans, about 63% of loans, and SME loans, about 25%, together with fee-based wealth management and transaction services. By end 2022, total assets neared YY 12.7 trillion, interest income reached over YY 210 billion, and net profit exceeded YY 52 billion, indicating scale and profitability aligned with retail banking fundamentals. Postal Savings Bank differentiates itself through its mission-driven focus on inclusive finance by providing microloans, poverty alleviation financing, agricultural loans, 1.41 trillion balance by 2020, SME support, and green and digital lending infrastructure like IT pads and mobile banking. It plays a central role in rural economic development. Investment in technology is systematic. The bank allocates around 3% of revenue to fintech innovation, applies facial recognition payment systems, employs big data and AI for underwriting and loan management, and has developed agent-based financial platforms like PSCB Canteen and digital portals integrated with China Post's retail network. Historically rooted in postal networks, PSBC is backed by the government and rated investment grade, A+ Fitch, A1 Moody's, AAA by local agencies, enabling stable funding and regulatory alignment with national financial inclusion objectives. Its competitive edge stems from unparalleled branch coverage, especially rural reach, low-cost deposits, deep customer relationships, and an expansive agent network that few other banks can replicate. The bank also leverages its scale for cross-selling wealth management, pension products, and digital finance, enhancing its diversification of revenue streams. Further, by setting up a wealth management subsidiary in late 2019, it joined China's major banks in tapping into a multi-trillion yuan market with index-linked and fixed-income products. Supported by its vast retail customer base, human capital is prioritized via continuous employee training, representative forums for welfare, risk control training, and digital services staff deployment to ensure service quality across urban and rural networks. Risk management is disciplined, with low non-performing loan ratios, s 1.4%, robust provisioning, and oversight integrated across all lending. The bank has also made strides in sustainable financing. Its green loan portfolio at end 2020 was over Y 280 billion and rising, aligned with environmental and carbon-neutral standards. In summary, Postal Savings Bank of China is a retail-oriented, technology-enabled bank with unparalleled physical distribution focused on rural, SME, and micro clients. It earns through interest and fees, leverages government support and agent networks, and invests strategically in digital and wealth services. As China's premier inclusive finance institution, it occupies a unique niche bridging urban-rural financial divides while building scale, risk control, and innovation for long-term stability.